Trend or counter trend? Big topic. Everyone talks about it from retail to the most seasoned traders. Counter trend versus trend. Should you trade with the trend or should you find opportunities for a pullback or counter trend? Depending on who you are, if you are a newbie, novice trader, retail trader who focuses only on playing candlesticks, you have heard the phrase and probably have lived by the phrase, trend is your friend until the trend ends. That saying is very misleading because if you really pay attention to the market and have played in the market for a while, you know that there is rarely a trend in the market. I believe the statistic is 10% of the market actually trends and the other 90 trades in range. That is very true. From my experience, it's very rare that you can catch a trend day or a day that you can make money continuously the entire day, whether you're playing calls to the upside or puts to the downside. On my screen is an example of a retail chart with a little bit of trend lines. All right, so we're going to start on the retail side. And you see here's a trend line here and a trend line here. I like my little arrows. So right here is a trend line. We're trending down. This is a retail chart. And then here this arrow here is a trend line up, right? So we're seeing the overall IWM in this case from the 18th of December, we're trending all the way down until the trend is no longer your friend. Uh, that looks like the trend ended January the 2nd. So that downtrend ended on January the 2nd, and then it came back under it, and then now looks like it's trending back up. Here, this trend higher started December 20th, and we've been trending till it's no longer your friend or no longer trending at looks like the Friday, December the 27th, right? So here is that trend and that counter trend, right? So trending down, counter trend up, trending up, counter trend down. Which one do you do? Do you play the trend? Do you always follow the trend? Or do you look for areas to buck the trend, to counter trend, to find areas of put of pullbacks, right? And if you're a retail trader, this is probably what your charts look like. You probably look for that trend. You look at the RSI and the stochastics, the MACD to see if you are oversold or overbought, oversold, overbought to find pullbacks, right? This is the typical retail way of looking at trends to see if we're actually trending in the market, whether it's up or down. And it doesn't depend, and doesn't matter which auction you choose to participate in, whether it's IWM or NVIDIA or anything else. Everyone looks for that trend or that counter trend. The way I trade, I actually look for counter trends, but I do it a little differently than the regular retail charts. I'm going to show you how I look for trends or counter trends in the market. We're going to switch over to more of an institutional way of looking at the charts. And this, everybody, is market profile, better known as TPO, time price opportunity. And this is how I look for trends. It's not so much about price, but more about value. The real trend is in value. Now, if you guys are familiar with market profile, if not, I will post in the description my market profile for beginners video. Go check that out. But just to give you a little overview of what real trend is. So I want you guys to focus in this area here. Let me get my little pointer. So this area in here, right? This is the area I want us to focus on from December 19th up to December 26th. Here is the real trend. I want you guys to focus. Hopefully you guys can see this, focus on this TPO here, right? Here is a bluish grayish box between, say, 224.24 all the way down to 221.50. That is the value high and the value low of that entire day, December 20th. That is considered the 70% of all trading that happened that day. Is considered the value. So IWM's value was between 224.24 down to 221.50, the entire day's value. And as you can see, look the day before, December 19th, that value was a little lower, right? So the value of December 19th was actually roughly 221.46 down to, let's say, 219.65. That value from December 19th to December 20th, value has gone up. So trend has gone up, right? Not only has the value gone up, but price has gone up. So you can say the trend has started, right? If you live by that saying, the trend is your friend till the trend ends, the trend started, right? From the 19th to the 20th, the trend has started going up. Not only did the value go up, but price has gone up. Now, if you go down to the 22nd to the 23rd, Monday, volume has gone down and price has gone down. So technically, the trend is your friend till the trend ended, and the trend ended it on the 23rd. But then from the 23rd to the 25th, sorry, to the 24th, then to the 26th, value has creeped up, right? From the 23rd, value from value high and value low in between that little gray area is the 70% of all trading that day. The value of IWM that day went from the 23rd, the 24th went a little higher, right? So the 23rd value was from roughly 221.48 down to 220.32. The next day, the 24th, value creeped higher. Now is at 223, let's say, I can't see with my cursor, let's say 230, 223.34 down to 221.50. So value of IWM is creep. So the trend has started. All right, the very next trading day we had to skip because Wednesday the 25th was Christmas. So the next day, the 26th, value has creeped up. So now it is now between 225.63 and 223, let's say 70 because my cursor's in the way, but value has creeped up. So if you look at a trend line, right? Value has, for people who love trend lines, value is going up, right? So we are seeing a trend in IWM. Now, what happened that Friday, the 27th? That trend is your friend to the trend is no more, right? That value has dropped from the 26th. Again, that value was 225.65 roughly to, let's say, 225.65 to 223.70, let's just say, because my cursor's in the way of that number. But the value has creeped up. The trend is your friend. And then the 27th, it became no more. So when you're looking at IWM versus, I'm sorry, market profile versus playing candlesticks, now the question should be, well, how do you know when the trend is going to end or potentially end? There's a couple different ways you can look at that. For one, you got to look at the bigger picture. It's not just simply about price and playing candlesticks. It's also about value. You got to look at the bigger picture, what happened in the last, let's say, 5 days. You also got to look at economic reports. Is there jobless reports are coming out, or is there CPI or PPI? Any of those important reports that can drive the market up or down. Uh, Economic reports can be catalysts to buyers coming into the market, or if bigger boys want to sell their positions down. Those are very important. Again, in other videos, I've talked about the differences between plain candlesticks and market profile, but it is also another important element of trading, and that is economics, right? The bigger players get nervous when big news or big reports are negative, like CPI, PPI, those are inflation numbers. When those are positive, more times than not, you will see buyers come into the market. Now, again, that all depends on the auction, but more times than not, you will see that as a catalyst to drive the market up. Or if those inflation numbers are bad or jobless numbers are bad, we've added more jobless job applications or unemployment. I'm sorry, unemployment applications have risen. That can be the catalyst to drop the market down. It's you have to look at the market in a bigger picture. It's way more than looking at candlesticks. Again, not to go too far into my last video, you can go back to that. I'll post that in the description as well. But playing candlesticks only focus on price, right? You can get trend, but how do you know when trend can possibly reverse? When does that trend become your friend until it's not, right? How do you know that? It's definitely not through indicators because we all know that indicators are lagging, right? They only show when the data is already posted. It's great to know the past, but you need to know what's happening now. And you can do that with order flow, and that's another video, right? So this only tells you the trend. This here, market profile, tells you the trend, but it also can give you an idea when that trend can end. And here's an example, quick example of why this trend ended. Now notice again from the 23rd, 24th, skip the 25th to the 26th, trend technically was going higher, right? Not only was price going higher, but value of those 3 days were going higher. Now, how could you possibly know or possibly think that the trend would reverse back? Well, if you focus on this profile here, December 26th, you have a couple of areas, just real quick. There is an area called value high and value low, right? This is the very high of the 70% of all trading that happened that day, and this is the very low. So if I put a line right there at the very high, roughly 225.64, that is the high of value. Now, if you know what POC is basically point of control. That is basically where the most trading has happened between buyers and sellers in that day, right? So this is where POC is where buyers and sellers agreed on price the most. The value high is where buyers and sellers agreed on price at the very high of that day. And then if I put a line down at value low, that is where buyers and sellers agree the very least of that day. Now, above the value high is where buyers and sellers did not agree at all, and the below of value is where buyers and sellers didn't agree on price. So if you get to the very high of the value for that day, and you see the Friday the 27th, we opened, looks like 224.29. So roughly here, right? Roughly here is where we opened. Price went all the way up in A period, past the POC, again, where buyers and sellers agreed on price the most, up to that value high where buyers and sellers agreed on price up to that point. 225.64. That's where buyers and sellers agreed on price, the very the very high of price, right? They didn't agree on price at 225.65, 225.70, 225.60. That's where they did not agree, right? So if I was to, here's a quick lesson. All right, so this is the very top of the 26, which is called the extreme high. If I will go from the extreme high down to the very top of where buyers and sellers agreed the most, can you see where on the 27th we opened roughly 224.29? Price went to where buyers and sellers agreed the most, up to where buyers and sellers agreed the very high of price. So again, 225.64 is where buyers and sellers, the last price point they agreed before a seller came in and said, you know what? IWM is not worth anything more than 225.64. right? And you can see that in the profile before on the 26th because price didn't stay there long and it didn't agree on price, or buyers and sellers did not agree on price at these price points between 226.32 down to 225.64 is where buyers and sellers did not agree. Remember, anything above value high and below value low is where buyers and sellers did not agree on price. Those are areas where you want to look for opportunities to buy or sell when they don't agree. Inside of value is the place where you do not want to participate in the market because you don't want to participate while buyers and sellers are agreeing on price. It's not going anywhere. You may see a pop up here or a pop down there, but you won't see a significant move where from areas where buyers and sellers did not agree on price, right? So then when you see on the 27th, price went all the way up to an area on the 26th where they did not agree on price and it dropped, okay? So that is the real trend, wrong one, I'm sorry, trend until it ends, right? Trend is your friend until it ends. But why did it end? Because price got to a point where buyers and sellers did not agree on price. All right, guys, I hope that little lesson helped. Counter trend versus trend is a topic along with order flow and playing candlesticks. All of these are hot topics. And I said in my intro that I just did, I think it's not going to come out until 4 o'clock. Tomorrow, which is January the 5th. So I'm talking ahead into the future. But another hot topic is counter flow or counter trend and trend. I said in my intro video, which will be coming out soon, that I'm gonna have more videos and more topics about things like this, more foundational information that'll help the newer beginner traders understand the market a little better to get to the more professional, more seasoned concepts and terminology. All right, guys. As always, I hope you guys find value in my video and my channels. And as always, if you have any questions, do not hesitate to leave a comment. I always reply back. Until next time, guys, I'll see y'all in the next video. Have a great rest of your weekend, and we'll talk soon.